Okay, this is Dr. Sridhar, Assistant Professor of Commerce, Government City College, Hyderabad. Today's topic is accounting for depreciation, part 1. In today's class, we will learn the what is depreciation, what are the terms related to depreciation like depletion, amortization, obsolescence, causes of depreciation, what are the objectives of charging the depreciation, and lastly we'll look at factors affecting the amount of depreciation. To begin with, what is depreciation? Depreciation means decrease in the value of fixed assets due to their use in business, passage of time, or obsolescence. In the other words, the permanent decrease in the value of an asset due to wear and tear, also called as depreciation. According to accounting standard number 6, which deals with the depreciation, the depreciation is a measure of the wearing out, consumption, or other loss of value of a depreciable asset arising from use, efflection of time, or obsolescence through technology and market changes. Depreciation is allocated so as to charge a fair portion of the depreciable amount in each accounting period during the expected useful life of the asset. Depreciation include amortization of assets whose useful life is predetermined. Here, the depreciation is charged in order to allocate the amount of the asset to its lifetime, to its useful lifetime. So the amount of or the asset which is used during the current year, the value of the asset which is used during the current year is treated as expenditure and will be charged to the revenues or incomes of that particular period, so that we will be able to ascertain the exact true profit or loss for a given period. What is depreciable asset? So here a question comes, which assets are subject to depreciation, or else on which assets we need to charge the depreciation. Here depreciable assets are assets which are expected to be used during more than one accounting period. That is, if an asset which is for a use in the business organization for more than one accounting period, on that we can charge the depreciation. And have a limited useful life, that is those assets which have got the limited period of life, for them we are going to charge the depreciation. Are held by an enterprise for use in the production or supply of goods and services, for rental to others, or for administrative purposes, and not for the purpose of sale in the ordinary course of business. An asset here is purchased or procured by the business concern purely in order to make it use in the production process or in the process of supplying the goods and services, will be subject to depreciation. And here the assets which are, or the goods which are meant for sale, will not be subject to depreciation. So here in brief, a depreciable asset is that asset which can be used for more than one accounting period, which has got a limited period of time, and this asset is purely used for use in the production or supply of goods and services. And even if the asset is for rental purpose, it is also subject to depreciation. Next, what is depletion? Here there are certain terms which are associated with the depreciation. Depreciation is basically charged on the fixed assets of the organization. And here the term depletion refers to the physical deterioration by the exhaustion of natural resources like quarries, mines, oil wells, etc. Due to mining or extraction, the stock of minerals, oils, etc. is depleted, reduced. In case of such assets, usually depreciation is charged on the basis of quantity produced. So the depreciation, in the place of depreciation, we use a word called depletion in respect of wasting assets. Here wasting assets are those assets which are if the value of which exhaust after a particular period of time. Say for example, there is a quarries or a mines. Say for example a coal mine wherein you go on extract the coal from the mine. After a particular period of time, the quarry becomes empty. That means all the coal is exhausted. So those assets are called as wasting assets. Here we use depletion word in case of charging the depreciation for wasting assets, and here the basis is generally the quantity that is produced from the particular asset. Next one is amortization. Amortization refers to the economic deterioration of intangible assets like goodwill, patent, trademarks, copyrights, etc. It is a practice to write off the intangible assets over a reasonable period. When a part of an intangible asset is written off, it is called amortization. In case of intangible assets, we use word amortization in order to write off the amount of this particular intangible assets. So the term, instead of using the term depreciation, we make use of a word called amortization in case of fixed intangible assets. Then what is obsolescence? The term obsolescence refers to the economic deterioration of assets due to the change in the technology, invention of improved equipment, market decline due to change in the taste and fashions, etc., or inadequacy of existing plan to meet the increased business. Depreciation is affected by obsolescence as it decreases the value of asset. Here, obsolescence is nothing but outdatedness. Say for example, a person has purchased Maruti Swift Desire car 2019 version, wherein after a couple of months a new version is introduced in 2020 year. So due to improvements in the technology, due to upgradation of the car which is purchased in or the car model of 2019, the value becomes less when compared to the 2020 model. So here, due to upgradation of the technology or improvements in the equipment or the asset, the value diminishes. Though the asset has the capability to serve the market, but as due to changes in the technology and due to changes in the taste and fashions of the persons or the market, the value of the asset decreases, and this is called as obsolescence or outdatedness. Then we will look at what are the different causes for depreciation. What makes the value decrease? Why the value of an asset declines? We'll have a look on the different causes. The very first one is wear and tear. When the fixed assets are purchased, they are used in the organization for productive purpose. When they are made to use, certainly the due to wear and tear, the value goes down. Due to the constant use of fixed assets in the business for generating the income, the value of such assets is decreased. It is called wear and tear. This is the main cause of depreciation. When you put the asset into action, usage, then generally the value comes down. Then passage of time. Here this is something different, wherein not only due to wear and tear, that is usage of the asset, even if you are not using the asset for a longer period of time, but due to passage of time, the value declines. Say for example, we have purchased an asset but did not use the asset for long period. Even then, when it becomes old, the value declines. Every asset has a certain economic useful life. With the passage of time, effective life of the asset goes on decreasing. Certain assets like lease have a certain legal life. With the passage of time, value of such assets goes down. Even may not be actually used in the business, whether you use it in the business or not, but due to passage of the time, also the value of the asset comes down. This is also another reason for the depreciation. The next one is depletion. Depletion is nothing but reduction in the natural resources. In case of wasting assets, just now we have looked at what is depletion. When you make go on use the asset, wasting asset, certainly the value decreases. This is the another reason. Then obsolescence. Due to invention of new technology and assets based on the old technology may become obsolete and out of date. Then accidents. Accidents may also cause a permanent fall in the useful life as well as the value of assets. Permanent fall in the price. A permanent fall in the market value of investments is recorded as depreciation. Other assets are depreciated on the basis of its useful life. So, the different reasons or the causes for the depreciation. These are the reasons for which the value of the asset comes down. Then we look at what are the different objectives, why a business concern has to charge depreciation. Can't it be possible for the organization to avoid depreciation? If at all, if it avoids, what that happens we will look at, or what are the reasons which makes the organization to charge the depreciation, we will have a look on. The first one is to ascertain the true and fair profits. Say for example, a person has purchased a printer or a Xerox machine, true copier, investing 1 lakh rupees. That fellow started doing his business, making use of the Xerox machine and earning the money. So the lifetime of the asset is 5 years and he has invested 10 lakhs rupees, 1 lakh rupees. Here every month, every year he is making a profit of 1 lakh rupees and he did not consider the depreciation. But after using the asset for 5 years, the total asset is exhausted and he has to replace the asset. Here, every year he has made use of 1 lakh is the cost of the asset and it is useful for only 5 years. That means 20,000 rupees value of the asset is being used by the businessman to generate a profit of 1 lakh rupees. But as he did not consider this 20,000 depreciation or the reduction in the value as an expenditure for that particular period, the whatever the profit that he thought, that is 1 lakh rupees, is not the accurate or the true profits. Instead, if the depreciation is also charged as a cost for that particular period, 1 lakh minus 20,000, so the net result 80,000 is the true and fair profits of the organization. Here with the example we are able to understand that it is only possible for a businessman to ascertain true and fair profits of the organization only if when he charges the depreciation. Then the next one is to show the asset at its proper value. In the same example, in the previous example, in order to, when the depreciation is not provided by the businessman, every year the asset value is shown in the books as 1 lakh rupees, but the original value is not worth of that. Say at the end of the, after using for 1 year, he has already consumed 20,000 rupees value of the asset for that particular period, but he did not used or charged the depreciation amount. Instead, he has shown 1 lakh as a asset value, which is not exact or accurate value of the property that is held by the businessman. Instead, the 20,000 rupees, whatever the value that is consumed during the year, is charged as depreciation, and the same amount is deducted from the value of the asset to arrive at exact 80,000 rupees, which is the value of the existing asset. So here, by providing the depreciation, the assets can be shown at its proper value. Then the third one is to make arrangement of funds for replacement of fixed asset. In the same example, as a true copier, that is a Xerox machine, which can be used for only 5 years, and if the businessman has charged depreciation every year 20,000 rupees, as this is a not a out of pocket expenditure, that is depreciation is treated as hypothetical notional cost, that is it is assumed to be the cost but will not be paid to the outsiders. Here the 20,000 which is charged as the depreciation every year should be kept aside so that for 5 years the accumulated amount comes to 1 lakh and immediately the machine can be replaced after its useful lifetime. That is, so in order to make arrangement of funds for the replacement of fixed asset, the depreciation is to be provided. Ascertaining accurate cost of production. When the depreciation is considered as the cost incurred for that particular period, this amount is also assigned to the goods cost that are produced during the particular period, which will help the businessman to ascertain the exact or accurate cost of production to comply with the legal provisions. Here you need to, according to the Income Tax Act, we need to chart the depreciation and show it in the books of accounts. And lastly, when you are charging the depreciation, it is tax deducted, that is, it is deducted from the income that is generated, and the net figure after charging the depreciation is available for tax. So when you are deducting the amount of depreciation from the income, it will help you to avail some tax benefits as it is treated as expenditure. So these are all the different objectives for providing the depreciation. Then we look at what are the factors affecting the amount of depreciation. So how to charge the depreciation, or what are the different elements that are to be considered for calculating the amount of depreciation to be charged every year. Assessment of depreciation and amount to be charged in respect of thereof in an accounting period are usually based on the following three factors. There are three things which need to take into consideration when charging the depreciation. One is historical cost or other amount substituted for the historical cost of the depreciable asset when the asset has been revalued. Here, what is the cost incurred for procuring the asset or for acquiring the asset? That is the one thing we need to consider. And expected useful lifetime of the depreciable asset, we need to look at what is the time period that the asset can be used in the business. And the last one is, what is the estimated residual value or the scrap value after the end of its useful lifetime. So for every asset, even after its complete usage, there is some amount that can be realized by selling out, which is called as a scrap value or residual value. So one is, we need to know the cost of the asset. Next one is the expected lifetime or useful lifetime of the asset, and the third one is the residual or scrap value of the asset. These three forms the basis for charging the depreciation. Then what is historical cost? Historical cost of the depreciable asset represents its money outlay or its equivalent in connection with its acquisition, installation and commissioning, as well as for additions to or improvement thereof. So whatever the cost that is incurred for procuring an asset, for its installation, for its acquisition, for its commissioning, and if any amount that is incurred for its improvement, all these is called as its historical cost. The historical cost of a depreciable asset may undergo subsequent changes arising as a result of increase or decrease in long-term liability on account of the exchange fluctuations, price adjustments, changes in duties or similar factors. So the historical cost is subject to changes, which we need to take into consideration. Then the useful lifetime of a depreciable asset. Whenever we are purchasing an asset, every asset has got its predetermined useful lifetime. So the producer or the manufacturer of that particular asset will specify its useful lifetime either in terms of units that it can be produced or in terms of time period, that is in terms of years. We need to take into consideration the useful life of the asset. Then that's all for the today's class. So we will discuss in the next class what are the different methods of charging the depreciation. Thank you.